Turning to business news now with our business editor Giles Beckford. A significant Supreme Court decision that's left power company Trustpower, Giles, welcome from Wellington, with a big tax bill.
Indeed. Can we just say we've just had a nod through the control window here, and when you said, were we bored with the unitary plan in Auckland, we didn't say a word, but we nodded. But yes, turning to more serious matters, the Supreme Court, which is our highest court, of course, has backed up the Court of Appeal, which has confirmed an inland revenue ruling that Trustpower cannot deduct a certain level of expenses when it's been looking at big wind farms and other power projects. Now, this is known as feasibility expenses. It's all quite complicated, but it's been dragging on for years. The upshot of it is that the Trustpower will have to pay somewhere in the region of $18 million in back taxes and expenses. But it also casts a bit of a chill over the rest of the infrastructure scene, and companies who are involved in whether doing big projects, roads or the likes, they'll be starting to think, might I actually have to carry extra expenses on this? And we've even had a suggestion from somebody who looks at these issues quite closely that we may well see some companies just putting projects on hold because they can't be sure that they won't end up with quite a hefty tax bill. And on that point of view, you'd have to say it's not good whether it's a unitary plan in Auckland or in fact infrastructure here in Wellington or elsewhere in the country.
Yeah. Big ambitions, I think we learned about today, for the country's biggest rest home operator, Ryman Healthcare.
Right, look, we've heard of these before. They tend to fly a little bit under the radar. They're reasonably low profile, but you know, they're a top 10 company and they have a capitalisation of nearly $5 billion. At their annual meeting today, they said, well, we've just had our 10,000th resident, which is not bad going for a company that's been going about 17, 18 years. Their ambition is to grow that to 17,500 in 5 years, so another 7,500 people. They've committed to spending $200 million on a retirement village in Hobsonville in Auckland. And it did strike me also that one never really hears about retirement village operators having too much trouble in putting up quite significant residential developments. What is it that they do that local bodies and other private developers can't seem to do? And the other thing that strikes me,
it's worth asking that question. I presume they have a team of lawyers who are skilled at dealing with the RMA. And
well, clearly they look for decent sites, they have decent plans, they sort of built a formula with villages and the various stages of care that they want, but they seem to get things done pretty quickly, do retirement village operators, whether it's Ryman or Life Care or others who are in the field. So you know, I wonder whether there are lessons there to be learned from people who can do pretty reasonable sized residential developments quite quickly.
Yeah, well, they've got into the top 10 remarkably quickly, Ryman. What did the markets do today?
Our own top 50 index really flat, down a handful of points at 73.02, so just off those record highs seen earlier in the week. New Zealand dollar just holding its own, 70.4 US cents, just under 94 Australian. And if you're into posh shopping and you're in Wellington, David Jones opens the doors tomorrow morning in the revamped Kirkaldy's building on Lambton and Quay.
Wow, that's exciting, Giles.
I can barely contain myself.
Enough of your facetiousness. I hope they're still going to call each other Mr. and Mrs. like they did at Kirk's, you know.
They have to have a proper man on the front door opening it for you, John, so when you're down here next time, you'll be able to get your undies and socks at, you know.
Excellent, tremendous news. Tremendous news. Giles Beckford, go and behave yourself. Giles Beckford, our business editor.